Good evening, everyone. Uh, I welcome you back once again. I sent you this PDF, this slide, just to go through it. But today I'm going to explain both theory and practical aspect of it. Uh, I'm very sure we are all listening, and it will be good if we can pay attention to how I will be explaining this evening. To me, people have been asking, how does this forex work and how does people trade and make money? There's a simple trick on how to make money in forex markets. So how does that work? Stay tuned, and that's what I'll be explaining to you this evening. One is market analysis. You need to know how to analyze the market, how the market works, how the bullish and bearish, how the bulls and bear in the market operates. If you can get this, you can kill the market back to back. Like, you can make profit in this market back to back. There are some people, they will just go online, maybe on YouTube or any other place, to get some tutorial. The thing is that if you don't really understand how it works, you can't make money in this market. But if you know where to buy and where to sell, the buyer's territory and the seller's territory, if you can understand the concepts shared, you will make money in this market. But that's what I'm going to open your mind and eye into today. And what we'll be going through is market analysis. That's what we call market analysis. How do we analyze this market? Stay tuned. One is the concept of territory. That's concept of territory. They say a wall. Any market is a wall. A wall between buyers and sellers. A wall between bears and bull. All a trader has to do is, who is winning, is to decide who is winning and then join when the winning army starts its attack. But how do you know when the winning army is attacking? How do you know when to join the winning army? And how do you know who is actually winning? This is what I'm going to open your eyes to today. You understand? So all you need is to just pay attention. I've given you the PDF, you have gone through it, but today I'm going to explain how it works, the secret behind the PDF. You understand? Just stay tuned. So the territory are being won and lost every minute. Every tick is a small victory for one army and loss for another. Then how does one decide who is winning territory? That's the question. For you to be able to win the territory, for you to be able to make money in this market, you have to decide who is actually winning the territory. Then they now go further. They said whoever capture more territory per attack is winning. So you can see, but the truth is that you can still join the winning army and still lose your money. That's just it. Like, you are seeing a buy trend now, overall buy trend, and the market is actually buying. Then you join the buy, but you are still losing your money. You know why? Knowing how to buy and sell is not enough. You need to know when to enter. Your entry matter most, and your exit. You need to know where to enter. That's why some people are very good when it comes to sniper entry. Guess what? I'm one of them. I'm very good. When it comes to sniper entry, I'm very good. But for you to be able to know that, you have to learn. So let's continue. So they said, but the problem is that even when your enemy is not always fighting, they consolidate, they take rest, and let losing army capture few posts, and then they march ahead, recapturing all lost posts and some more. It's important to be with the winning army just when they start their attack. That is why I said sniper entry is very good, like it matters. Your entry matters. You don't just say, okay, because buyers are buying, you just want to join the buy. How about the pullback? What if immediately you enter, the pullback starts? How will you cope? That can take your money. Only that can take your money. So you have to, you need to know when to enter the market, and that's the secret you need to learn. So the trick is stay out when the winning army is attacking, or when the winning army is taking rest, or when losing army is making small profit. You know, if you see a trend, if you can understand the trend, then you see maybe a buy trend or this thing. Whenever market is consolidating, that's when the winning army are resting. You understand that? If you really want to make money, if you enter a consolidating market, you will definitely lose your money. So the trick is that you just have to stay outside when they are resting, when the market is consolidating. Then you join them when they start their attack. So I have some few terminology what to consider before you know who is actually winning in the market, the winning team. For you to be able to join the winning team, you have to consider all these 5 things. That's the guy that started the move, the higher high, the higher lows, the concept of lower high, the lower lows, the challenging spot, that is to say watching spot, and the bridge area or the turnaround point. So how do you know that? That's what I want to open your eyes to today. So just be patient with me, then at the end of everything you will see that it's very, very simple. Okay, this is the concept of higher high and higher lows. This is what they are trying to say. From this point, as you can see these charts, I'm trying to, okay, you have this PDF already, but I will try and go and log into my MetaTrader 5 now, then show you how it works, because you might not be seeing it very well here. I mean, you might not understand it clearly very well here, but I will take you to my MetaTrader 5 and show you how it actually works there. You understand? So, but then before then, let me explain some things here. So this is a downtrend. A downtrend change to an uptrend when the market move up through the previous high. What they are trying to say, they said the guy that started the move. Let me go back here. Let me treat them one by one. So the guy that started the move. This is the guy that started the move. How do you understand the guy that started the move? So let me go to my MetaTrader app. For the guy that started the move, this is how it works. First, you need to have a consolidating market before you can actually figure out the guy that started the move, or an upward trend or downtrend. But let me use this consolidating market as an example. For instance, if you have a kind of consolidating market like this, then you have to draw your trend line. You have to draw your trend line. You click on that trend, that object over there, and you draw your trend line. Because this market has been moving sideways, you don't even know where the market is actually going to. So for you to be able to know where to enter, how to follow the market, then you have to draw a line like this. We call it trend line. So after drawing the line like this, then you wait for breakout, either up, either above or below. Then as you can see, the market broke down here. So if the market breaks up, like, okay, for something like this now, here the market struggled to break it up at this resistance level, but it was very hard for the market to break it, so it came down, then went back to retest it, but it couldn't get to the level again. So then the market continued moving in a sideways level, then before the market finally broke it here. So for us to know the guy that started the move now, when the market, I want you to notice something. When the market broke this level, we realize that the and there is another candle that form above or below this candle that broke the level that I drew my trend line. That's the guy that started the move. That's that's a very very good confirmation for sell. You understand? Once you realize that the market, the line has been broken, and then another candle form under it, then you are good to go. You are good to enter the market. And this thing is the same as when the market breaks up. When you realize the market breaks up and another candle form above it, then you are good to enter for buy. That's all about the guy that started the move. Thank you. Like I said, I'm going to show you how the concept of higher high and higher lows work, and lower high then lower low work. For an uptrend, this is an upward trend. This is a buy trend. Actually, for you to be able to enter this kind of trade, you have to come down to your higher low. This is higher low. That is to say, from the beginning, higher low. The reason why I put higher in the first, like I call it higher low, that is to say, because the market is going up, it's actually an upward trend, so that's why we call it higher. We name it higher high, higher low. So for you to be able to enter this kind of market, you have to start from this beginning, this base here, this bottom part. That is where you start. That's where you're supposed to enter the market. If you miss this market here, assume the market has gone far up to this level, I'm not expecting you to enter here. You allow, this is higher high and this is higher low. You are supposed to enter a buy trend from the higher low, not higher high. Though if assume you open your MT5, then your MetaTrader 5, then you realize the market has already formed, is already forming higher high. You understand? What you will do is to be patient with the market. You wait a little, you allow another higher low, because the market is not always going straight. The market is always forming zigzag. It's always going in a zigzag form. So you allow the higher low to form another higher low. If you miss this one, you allow an higher high has formed, you allow another higher low to form, and that is how it works. You only enter here. It's either you enter here or here or here. Never enter from higher high, never enter from here, here or here. So that's how it works. Let me give you an example of lower high and lower low. Okay, this is a perfect example of a downtrend where we can actually see a lower high and a lower low. So before you can enter before you can trade a downtrend, you must make sure the market is forming a lower high and a lower low, going in a downward trend. You understand? How do you know this? Once you have discovered that the market is a downtrend, what you are supposed to do is you should just enter from your lower high. You check where the market is forming lower high, then you enter from the lower high. This is the lower high. Never enter the market from the lower low. You know why? Because the market might pull back against you. You understand? If you are following a downtrend, if you enter from a higher high, from a lower high, that is better. You understand? If you realize that the market has already formed a lower low, allow the market to form another higher or lower high before you enter. Then, because the market is not always going in a straight forward or in a straight line, you understand, it's not always going in a straight line, it forms zigzag. You understand? So you just have to wait. You have to be patient with the market. This is not something to rush. You must learn how to be patient. So you wait for the market to form another lower high. So that is where you enter. If you enter from lower low, no, that is not accepted. So if you enter from higher or lower high, yes, confirm. That is a real confirmation of entry. So I want you to always enter from higher out from your lower high, not lower low, once you are trading in a downward trend. You understand? So Another thing I would like to open your eyes into is, okay, how do you know when the market is about to reverse? Okay, I think I'm going to treat that in that PD here. This is a series. An uptrend is a series of higher high and higher low, and that's what we just finished explaining. That's the practical aspect of it. And uptrend change to downtrend when the market trade down through the previous low. Okay, now if you want to know how this market works, if you want to know how an uptrend can change to a downtrend, because you are not always buying, either you buy or you sell, but how do you know when the market has already overbought and it will now change to a downtrend? This is what they are trying to say here, that an uptrend changes to a downtrend when the market trade down through the previous low. Okay, how do you know now? Okay, like I said earlier, that this market, if it is an uptrend, you will always see higher high, higher low, higher high, higher low, but you will never see higher low at the same level. As you can see, are you seeing this one? Lower low, lower low, lower low, lower low, and another one is higher high, higher high, higher high, but they are not in the same level. But if you now realize the higher low and higher low, there are two higher lows at the same level, just knowing the market is about to reverse, that is to say, to change to a downtrend. Now see one higher low here, then another higher low here, that is to say the market is ready to become a downtrend. So that's just what they are trying to say. And this is swing, that is to say, these are the people that we have two types of traders. There are some people that swing the market, they enter from the tip of the market, you understand, but they take their profit from the down part, they always enter, you understand. So this is swing high, then this is swing low, you understand. So if you are a kind of trader, if you are if you are that type of trader that love trading from the tip of the market, from the highest high, those are the people we call swing traders. Then we have scalpers, because someone like me, I'm a scalper, you understand. No matter how the condition of the market is, I will still scalp my dollar out, like I will still make the money, because I don't stay long in the market, you understand. I only want to go to the market. I'm not that kind of trader. I'm not there. Sometimes I trade for days, I leave the market running for days, you understand, but that is not me. The real me is to just enter the market, analyze, then take out my profits immediately. So that's how it works. So this is market reversal. How do you know the market reversal? I just explained one just now. Once normally, ideally, there should be a lower low, lower high, higher low, higher low, higher high. But when there is no lower high but equal high, you realize that the market has formed equal high, you understand. And there is no lower low but equal low. Now you see, this is one lower low and this is one lower low. This is another lower high, and this is another lower high. So once you realize that there is, from an uptrend, this is a downtrend, right? From a downtrend, this market, if you realize this, if you can notice these two things from the market, no lower low but equal low, and no lower high but equal high, you understand, that means this market is about to reverse and start going up. If it is an uptrend, it will change to downtrend, but if it is a downtrend, it will switch to an uptrend immediately. So that's how it works. And thank you for listening. See you next time.